Traders at UBA said they expect a total of about 660 billion naira worth of bonds maturity and coupon payments this month, with the majority of it coming in this week. Chuka Nwachuku, head of bonds trading at UBA, joins me to discuss how this inflow will impact the bond market. Thank you, Chuka, for taking the time out to join us today. Well, you heard my question, so let's have your response. Should we expect this to impact the market?
Okay, the impacts of the bond couponment, coupon payment, and then maturity, like you rightly said, we're expecting about well over 700 billion this week, alone on the liquidity from the 2022 maturity and then to the coupon payment. So now this has impacted the market, because everybody is looking to the market is actually bullish. Actually, everybody's looking to buy, and that has affected the yield. So we saw the yield trend downward for 2026. We saw it trade down from 11.6, within 1 week to about 11.1. That's significant, and this will continue, especially with the level of and amount of liquidity in the system.
Let's just let me just take you back for a few seconds, just to get your perspective on the MPC outcome of the MPC meeting yesterday and how investors in the market are just, basically digesting and processing and aligning, the signal that they received yesterday with, their investments going forward. Obviously, a lot of investors probably expected some kind of tightening, obviously with negative real returns on investments at this point, but that didn't happen. So help us understand how they're processing that news.
Well, the news really has been, for a lot of traders, has already been pricing that CBN is going to maintain. Because if you look at it, really, I mean, this strategy has worked for the past 2 years. And then it's also helped to maintain stability in the system. So there's really no need, to tamper with any of the parameters. And that's clearly what they did, and with the level of liquidity, especially for this month and until March, you expect that CBN will continue with the CRR strategy and then continue with the moderate tightening of the system, just the same way they have done.
And as you know, we're probably going to have a supplementary budget very soon to make, make room for additional funding for the fuel subsidies. So that obviously means that the government we're going to see more borrowing at the market. I was talking to an analyst earlier, and he said that there's a possibility or the risk of crowding out the private sector in the corporate bond market this year. What are your thoughts on how the increased borrowing, how significant, how much more could we see, in terms of volumes coming to the market?
Okay, so now it would have been suicidal to, economically, politically, it wouldn't have made any sense to increase, to stop the subsidy. And I believe they did the right thing, in their own terms, removing the subsidy. Now, this will not mean that the Ministry of Finance will come up with a supplementary budget, and I'm sure the minister already mentioned that, and that will increase the level of borrowing you're going to see on the local market. In terms of liquidity, like you mentioned earlier, I will just say one thing as regard the inflation, which also came out sometime last week at 15.63, slightly upward movement from 15.4. And so this obviously will affect, slightly, in terms of the projection CBN has. Though the governor said yesterday that it's a short-term measure, that you saw the inflation figure move up due to the spending from the Yuletide season that we just came out from. So for me, really going into the year, it's going to be like this, within the next this first quarter, especially when you see a lot of maturities, a lot of coupon payment coming in between now and March. So on the trader side, what does that mean for us? What does it tell as a trader? It means that between now and March, yield will continue to drop. But then once the liquidity thins out, we see upward movement in yield going forward.
Okay, let's move over to the FX market. It looks like things are Not too different from where they've been in the last couple of weeks. CBN still trying its best to meet demand at the NAFEX and INE window, but we did see a slight strengthening against the dollar yesterday. Bring us up to speed on how the Naira has fared against the USD today.
Okay, Naira has pretty much been stable. It's traded yesterday and today at 415, 416 levels. So there hasn't been much change in terms of the rate, movement in rate. However, if you notice if you listen carefully with a communique from the CBN governor, he was talking, clearly, of course, it's a consign to them, and then they're going to do everything they can to manage the exchange rate, and that has also affected the decision, to maintain. Because I mean, if they decide to go against, do anything, if they decide to do anything as regard the rate, it will affect the exchange rate, and then as well as the the inflation. And so,
okay.
For me, really, they are doing what they need to do. They are intervening weekly, and then they are they are also managing the exchange rate.
All right,
And
Chuka, we're going to have
tight.
to leave it there. Thank you so much for talking to us today. We appreciate your time on the show. Chuka Nwachukwu, head of bonds trading at UBA.